are back for another Talk About It Tuesday, and I was asked to discuss a very popular video clip that's been used quite extensively by life insurance agents. And it's a clip of a well-known rapper who's discussing how he uses insurance. Very popular. You see it a lot in TikToks, Reels, YouTube videos. So I'm going to show you the video first, and then we're going to talk about it. So watch this.
The dumbest. I was like the dumbest person ever. I used to spend money on everything. Man, please. Yeah. Please. I'm going to open up an insurance, put $2-3 million in my insurance, and borrow from that and put it back in. I never lose my money, ever.
All right, so you've seen the video, and this video is oftentimes taken out of context and used to promote cash value life insurance policies as a means to wealth. Even though he didn't really say that in the video, but they take that clip and then they add a whole bunch of commentary and make it seem as he's promoting this thing to promote wealth. So let's just dig into it really quickly. So number one, if you heard what he said I take $2 to $3 million and I put it here. So that should be red flag number one. First things first, you should not be taking your financial cues from anyone who's on a much higher financial level than you. So let me give you an example. I love Warren Buffett, but I cannot follow what Warren Buffett does, and let me tell you why. So I invest in the stock market, he invests in the stock market, he's very successful. So you would say to yourself, well, I'll just do what Warren Buffett does. No, Warren Buffett looks for what he calls value companies that will give him between 2 and 5% return consistently forever. But because he can invest billions of dollars, a 5% return for him is far greater than 10% on $1 million for me. So if I only have $1 million to invest and I invest like he does, my return is significantly smaller. So if I only have $100,000 to invest or $10,000 to invest, 2 to 5% is nothing. But on billions of dollars, it's significant. So I can't take my financial cues in terms of what he does for himself from Warren Buffett. And so you shouldn't take your financial cues from somebody who's outside, far outside of your financial level. So that's just some good advice. And let's just say when I was at your level, this is what I did to get here. All right, so that's number one. Number two, let's just get into this whole cash value life insurance thing. So cash value life insurance, I don't care what you call it. It used to be called whole life, then it was universal life, now it's universal index life. All fancy names for an overpriced, poor producing product. And let's just be real. Life insurance is for what it says. It is a death benefit. It is to provide money for your funeral. It is to provide money for debts that your estate might be responsible for, and it is to replace income temporarily that may be lost because of sudden death and it was unplanned for. So that's what it is. It is not the Swiss Army knife of financial tools that can do everything. Swiss Army knives are terrible for everything too, by the way. So if you have a life insurance policy, it should be used for that. So let's look at this universal index life insurance. So what does it do? It gives you a term life insurance policy, and then some money goes into an index fund. Why would you pay for someone to do an index fund for you where the insurance agent gets paid for the life of the policy, where the insurance company gets paid for the life of the policy? So they take money from your earnings from this index fund when you can go and open up a brokerage account at, say, Vanguard or Fidelity and find a zero cost index fund and do it yourself and keep all of the profits from it. Why would you do that? That makes no sense to me. But if you're too lazy to go and open up the brokerage account yourself and scroll through and say, oh, there's a good index fund, and click a button yourself and then put the money in every single month, then I guess you deserve to pay somebody for doing that for you for the rest of the life of the policy, which is really the rest of your life. That's insane to me. So that's not a good strategy. So let's get to this other thing. Well, you know, it builds cash value so you can borrow against it. First of all, you don't borrow from yourself. He said, I'm in the video, he said, borrow from myself. There's no such thing as borrowing from yourself. It's your money. You can't borrow from yourself. But if you wanted a loan against an asset, because that's all it is, this is the insurance company giving you a loan against the asset. The asset is the insurance policy. There are better ways to get a loan from an asset. If you have real estate, it's called refinancing. You borrow money against an asset. If you have a savings account in a bank, you can get a passbook savings loan. That's borrowing against an asset. If you have a 401k, you could borrow against that. If you had a pension fund, you could borrow against that. Now, I wouldn't recommend borrowing against your death benefit, your pension fund, your 401k, because you're taking away from something that's very important where that money was designated for that. So if it is a life insurance policy, the money is designated for that. If you borrow against it and die, it is not there for the people that you created it for. If you just want to be able to borrow money, then you get another asset. You could borrow against your brokerage account. So again, if you had your own index fund and it had value, you could borrow against that. So it is ridiculous to me that you would take a tool designed to be a death benefit and try to make it an everything. It does not build wealth. It cannot build wealth. Matter of fact, the tool it uses, you can get more wealth, more profit from it if you do it yourself. So we need to just get rid of this idea of this cash value or whatever a life insurance policy builds wealth. It does not. A life insurance policy is designed to benefit your survivors upon your death. It is not designed for you. There are far better assets, far better tools, far better strategies for you to use to increase your wealth while you are here. Life insurance policy is not even it's not even something that you for leaving behind, right? It's not even an inheritance. You use other assets for your inheritance. It's not even a good tool for inheritance, right? It is what it is. So you will not build cash value. So stop trying to get financial information from rappers, number one. Stop trying to get financial information from Reels and TikToks and memes and YouTube, especially when the person creating those things is trying to sell you something. So I'd like to hear your comments. Please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.